Over the past month, 5 companies dropped by more than 50%, some of them. And no, it's not a bonus issue or a splash share split. It's actually quite devastating, right? So the first one, we have MMAG Holding. Second, we have NexG Bina. I'm sure they're linked. PJBumi and Pertama Digital. So Jonathan, what in the world is happening, man? Why are they all these, like, some of them might look so-called penny stocks, right?
Yeah.
Less than 10 cents.
Yep, exactly. We're going to go through each of the reason why each of these stock actually went down so much. So the first three we're going to be looking at is MMAG, NexG, and also NexG. Yeah, so these three are related and we'll talk about it over here. So MMAG, if you look at their latest annual report, right, you'll notice that the top 30 shareholders, majority of them have their shares pledged to a collateral. So in total, that's about 68.05% of their outstanding share is being pledged by something else, like a loan. So that is kind of like a recipe for disaster. So if let's say one thing like this person stock got like margin call, so once it's go down, then the other person who like took margin also on that account, you also like drop. So it's like a domino effect, like everything. So that's why you see there is like a huge drop over here, 86.7%. But there is no like announcement by Bursa that say that these top major shareholders sold their stocks. So we still don't know, we have no clue like what's happening.
But the hints are very strong, right?
Yeah.
At the very least, a big chunk of them offloading.
Yes, yeah, you can say that. So yeah, this is number one, which is that, already there's an orange flag over here, which when you see like the top 30 shareholders, most of them pledge their shares. Number two, it is NexG and NexGB. So these two companies are related, and how are they related to MMAG is that NexG also bought a lot of shares in MMAG. So they own about 9.53% and they bought the shares on the 27th of March 2025. So back then, I think MMAG was obviously, there's still some value lah. It was still at the high side. Right now, I think it's down. That's why their share price also followed down. Then NexG Bina, it is related to NexG because NexG owns about 32.6% of NexG Bina. And if you guys didn't know, NexG Bina formerly was known as Clasita. And I think if I recall correctly, last time before Clasita, it was known as Kaylee. So they sell those, lingerie, garments, all those kind of things business. Yeah. But anyhow, it is a bad capital allocation on hindsight because right now you see, right, once MMAG share price drop, then the stake that is owned by NexG also follows suit. So yeah, that's why their share price also went down. Okay, so for PJBumi, it's also similar to MMAG. So about 25.05% of the shares are actually being pledged also. So you notice that there's some sort of like a similarity. Yeah, it's a pattern when you see like most of the, or at least the top 30 shareholders, they are using loans as collateral, right, for their shares.
Well, not only that, I think you can use loans or your shares as collateral for loans, but I suspect it's a big amount of that.
Yeah.
Right? It's like, Elon Musk also does it, but his stake is like both hundreds of billions, right? And if he takes out 50 million, it doesn't matter. But I think for these guys, it's a lot bigger. Yeah.
And we're also going to talk a little bit about their fundamentals. It's also have to do with that. And last but not least, for Pertama Digital, also is similar. It's 22.33% of their shares are being pledged. So that's why they are also like down once all of these guys got margin call. And on top of that, for Pertama Digital is that failed to actually submit a proposal for their regularization plan to Bursa. So that's why I already gave them like delayed timeline already lah. But even though they gave like some more time, they still didn't manage to give. So that's why Bursa got say that, if you still don't give, then you're going to be delisted. So that's why there is a drop in share price. Now, you can see over here, it's actually easier to spot for Pertama, PJBumi, and also NexBina, because if you look at their past year's results, right, they have always been making losses. Except for NexBina, these are recently, they only make like a small little profit. But anyhow, it's totally like visible to you already that they are in the red. Yeah, so it's not so good. The other two company, which is related to MMAG and NexG, this one is slightly a little bit harder to know because their numbers are improving or their numbers are just good before that.
But so this one, you would say it's less fundamental related compared with the first one?
Yeah, so these two, you can somewhat say it is less. But for MMAG's case, right, you notice that their cash flow is actually very bad.
Right.
Yeah.
So is it a case where all three of them are linked, but because one is doing very bad, so the others get dragged along? Say something like that?
Yes, that, and also the fundamentals memang is like very
Right.
is very bad lah. So that's why
So again,
it doesn't
this
make
is
sense.
this is the old lesson, right? We're looking at.
Exactly. The only thing that is quite hard is for NexG. NexG, which is formerly known as Datasonic, they have like government contracts. It seems like their businesses are quite steady, but how they allocate capital, like they buy a lot of stake in NexG, Bina, which their fundamentals are pretty deteriorating. And then another thing is that they bought stake in MMAG. So these two capital allocation kind of like tells you this management is not really like, using the money well, or at least it's not really improving their returns on equity or returns on invested capital. So they also got brought down despite they have like a good operating cash flow and also business. So yeah, the final thoughts over here is that cash flow is still very key, and you also need to know these two difference, which is the cash accounting and also accrual accounting, which we talk a lot about inside the SIB program. So cash accounting is where you actually receive the cash, real cold hard cash from your customers. Whereas for accrual accounting, some businesses, they may have like credit terms with their customers. Like their customers might not pay them upfront every single thing. It may like give them progressively. So it's very important for you to look at the cash flow. If let's say this business doesn't give you like positive cash flow, right, every single year, then it will be a problem unless they manage to find some sort of fundraising from shareholders or maybe from debtors. So yeah, the number one is cash flow. Second, which is the capital allocation. This is also very key, not only just for business, but also for ownership. I think we talked about this in our Top Glove video also, whereby Tan Sri Lim, he bought, or at least he bought back a lot of shares during the peak of the COVID-19. I think was around like, was it 9 ringgit a shares after like the split? Yeah, so it wasn't really a great business decision, or at least the capital wasn't allocated well.
Basically what the business or the quality of the business can tell you is how well it can generate cash either today or the future, right? But then when the cash is generated, this is the difference between business ownership and investing, right? As an investor, you have to look at the business owner and how he actually moves the money around. Right, if he starts doing things like buying shares just because he needs to defend the reputation of the company or to show that the company is undervalued, I think that's the wrong motivation.
Yep. So the third one, it is, of course, you don't want to buy a share because their prices are going up. So the case in point for MMAG, if you look at 2024 to, I would say, before the crash, right, 24th of October 2025, the share price actually went up 5 times. So it's like 427%. It's a big jump. So I presume that a lot of retail investors got hooked because they saw like there's just a massive jump in share price, whether is it too late to chase or not, even though their fundamentals are very bad. Even though it is bad, share price still go up. So I think this is very key. And it's also like a hidden, I would say it's like hidden, but it's more of like, it's like a temptation for you to like buy this company because it seems like there's like a turnaround story just based on share price movement. Yeah, this is the same for Perak Transit as well, that we talked about in our video. So Perak Transit also share price like triple, even though like, and also their fundamentals also is doing pretty decent. You can see that profits are going up and revenue also is going up. But if you look at their cash flow, it's actually in the negative. And on top of that, the major shareholder also pledged a lot of their shares and they also actively trade lah, or at least they dispose like half of their stakes before the margin call or the warehousing that was happening at that time. So yeah, don't buy because the share price is going up. That shouldn't be your first or priority. The main decision to actually buy a stock, buy because there is cash flow, because their business is doing good, and also the management is allocating capital the right way. And finally, of course, you want to buy a very quality and rare businesses. This we talk about a lot in all of our videos and even our webinars. So if you are interested in what are the quality or rare businesses, well, you can find it inside FIRL Pro. It's where we initiate a lot of these, potential multi-baggers or compounders.
Recently, we exited Velesto, right?
Yes.
So I think we went around 19.5, 18 cents.
Yes. So for Velesto, it is more for our own personal port that we have exited. But for the boring port, it is still
but the key is that we actually share this with our members quite early on, right?
Yes. So Velesto, it is still inside a boring port. The reason why is because boring port is solely for the dividends, less so on the capital appreciation, unless they cannot pay out more dividends as it was before. But our personal port, we sold Velesto already for something else because, there is an opportunity that we see that is much more enticing to our capital as compared to just staying inside Valesto. But just to show you guys what are these three companies, right, is actually each of them initiated in these portfolios over here. So you notice there is the FBM, which is the Malaysia portfolio, PG is related to global, and TB is the foreign portfolio. So Malaysia one, our number one, the top performer is KGB. We talk about this like a lot of times already. I don't think we need to explain already. Futu is a company
more recent.
It's more recent one. If you guys didn't know, so they are related to Mumu, and we saw like Mumu is like taking market share, in the stockbroking industry. Then we thought that, I think they are going to do very fine, do very well, and we initiated a position around April. And since then, I think one of our members also managed to 2x their position inside Futu. And last but not least, Valesto is related to the borrowing portfolio because we know that the management wants to pay out a lot of their cash flow to minority shareholders as dividends. So this is very, very good. I mean, they're sharing at least their wealth to the minority shareholders. So if you want to know how we do our write-ups or you want to get a taste, you can check it out inside our free sample over here. Inside there, we wrote a sample report which is related to KGB, and also we also wrote about Delium. So if you want to see how we do our write-ups, how we analyze companies, there's a free sample for you guys over there. And on top of that, there's a free video on modes inside our SIB program. So all of these things are totally for free. You can just check it out in the free sample. The links will be in the description and comments. So stay vigilant, guys. Don't buy any companies just because share price is going up. Buy because it has a rare business, it has a good quality and good management.